talking, one of my favorite topics is investing and returns, looking at the NGX. Now, this is for July. So far this year, NGX up by 30.1%. But in July, the index, that's the all-share index, was down by 2.2. The NGX 30 for July down by 2.5. Oil and gas was up 5.5. Consumer goods, banking, industrial goods, all down. We're also going to be having a conversation around ETFs. I said exchange rate earlier, but it's exchange traded funds. Jesusetuntun Ajagun, who is a portfolio manager with Vetiva Capital Management Limited. She's with us right now to talk about it. JT, thank you for giving us a nickname to help out. Thank you so much for being on the show. Good morning to you. So let's just break it down piece by piece, starting with the triggers that led the all-share index to fall by over 200 basis points in July.
Yes, so for that, the losses were majorly driven by declines across key sectors like the industrial goods, banking sector. I know the industrial goods sector lost about 5%, and that's due to the decline in Dangsem by about 11% month on month. However, if you look at it critically, year to date, we noted that Dangsem had already gained about 80%. So it was understandable to see investors take profits in the month of July, which drove the ASI down.
And is that similar? We're looking at the NGX, that's the NGX 30, which I think they modeled it after the Dow Jones, which is the 30 big stocks or whatever. But similar headwinds for the NGX 30's fall compared to the all-share index?
Yes, similar headwinds. So the NGX 30 just basically means just is an index that tracks the top 30 stocks.
Yeah, so it's like the Dow Jones Industrial Average.
Yes, listed on. So we saw that same drivers that drove the ASI down also drove the NGX 30 down, and because the NGX 30 covers or accounts for over 70% of the market, what we see here happen is that the NGX 30 and the ASI would most likely, they typically would, deliver similar returns because the NGX 30 is covering over 70% of the market. However, like I said, for the ASI, we know that the NGX 30 as well had delivered about 29%, year to date, similar to the ASI. So it just makes sense. Investors are taking profits and, that's quite understandable.
Just to help our viewers, the ASI is the all-share index. Dangsem is Dangote Cement and all that. You analysts love to use your acronyms. Okay, so oil and gas sector did perform pretty well in July, beating the others up by about 5% or so, 5.5. Every single time I talk oil and gas, Seplat seems to come off. What are the drivers for the index? Oil and gas?
So for the month of July, we saw that Owando actually was major driver for that performance. Owando appreciated by over 60%, and what we saw happen there was, investors just basically reacting positively to the acquisition of ENI Agib. So we just saw that, play out in the month of July, and that was what led to the appreciation in the oil and gas to about 5%, and also
so you got Seplat mobile assets, you got Owando, ENI. So it's good to see indigenous oil and gas firms picking up these IOC assets. All right, we've talked a lot about the consumer goods sector because maybe we can bring back our Ghana, Nigeria inflation chart, because we always seem to talk about inflation when we're talking about consumer goods. Also hammered in July. What were the triggers there for the consumer goods sector?
So for the consumer goods sector, I know Dang Sugar, Nestle. Dang Sugar lost over 11%, Nestle over 9%, and just like you said, macroeconomic issues, inflation, exchange rates, sort of, affecting, all of them, and those were the major triggers for the declines in the consumer goods sector. And I believe they also released, we saw a lot of consumer goods sector actually release their results in that month, and because of the weak results, we saw investors react negatively to their performance. All this drove the declines that we saw in consumer goods.
It's funny you mentioned that. We had a segment where we looked at it was Dangote Sugar, I think Nigerian breweries, Nestle. It was just loss after loss. Is that a sector that people should still look at? Do you see further growth for consumer goods, or as long as the macroeconomic headwinds, inflation are high, it's going to be battered?
I think it depends on your objective as an investor. If you're looking to sort of hold it for a longer term, I know there are some companies in the consumer goods sector that are attractive buys now. So it depends on the objective as an investor.
Yeah. All right, another heavy one, the banking index. There's a recapitalization going on. Who just extended theirs? Access extended their recapitalization. Fidelity, Zenith just came on board. There's the bank FX windfall tax. There's all these things. What about banking? So the banking index was, where is banking? Yeah, 3 point. Yeah, so it was hit pretty hard in July. So what happened to banking? The banking index.
So for the banking index, just like you said, the recapitalization exercise, just sort of like drove the performances of stocks in that sector downward. And not just that, the proposition of the federal government on the, the windfall tax, 70% windfall tax.
Ouch.
Yeah, so I feel like investors just sort of, reacted negatively to that news. And because of that, it sort of drove the, banking index downward. However, if we were to look at it from a valuation perspective for these banks, we believe that these banks, or most of these banks, are actually undervalued. I mean, they are trading below their book value, and aside from that, when you compare them to their sub-Saharan peers, you see that they are, well undervalued and they have significant potential upside. Okay,
I'll maybe have you say all that again, because there's members of our team that keep asking me about the banking stocks. I hope everybody's listening to an expert in the field telling you that banking stocks in Nigeria are undervalued and you should pick them up. But you want to diversify, right? You don't want to buy all banking stocks, right? You want to mix it up. All right. Industrial goods, you touched on that earlier. That also a pretty, what was that, 5.58% drop in July. So what was the hammer there for industrial goods?
Danksem. I mean, Danksem lost about 11%, month on month in July, and that was the major trigger for the dip in the industrial good. However, like I mentioned, year to date, I realized that Danksem had gained over 80% or about 80% thereabout. So it's understandable to see investors actually, take profit in the month of July. Also for the industrial sector as well, even though we saw a month-on-month decline, it's also notable to see that year to date, the industrial goods sector had returned about 60% thereabout in June. So it's understandable to see investors
take their profits.
Yes.
Okay, look, let's talk about ETFs now, the exchange traded funds. Define them. What are they? Because you guys have a V30, right? But we'll define it first for our viewers.
So an ETF, just like you said, it means an exchange-traded fund. And just by the name, an exchange-traded fund is basically a fund that is traded on an exchange like every other security.
Right.
But where it gets interesting is that that fund which is traded on an exchange is tracking an underlying index, right? Which means it's tracking an underlying basket of securities or goods or something like that. So me buying into an ETF just basically gives me access to the underlying. Well, for simplicity and also so it sticks better, I always love to liken ETFs to, you buying or ordering a pack of, a box of grilled platter, right? I'm ordering the box. However, when I get that box, I have assorted grills in it, right? My chicken lamb, my turkey wings. That's also the same way ETF works. I'm buying an ETF, VG30 ETF, for instance, that tracks the top 30 most capitalized stock. I'm buying the VG30 ETF, but there are several stocks that are embedded, or that, the VG30 ETF sort of houses stocks in telecom, stocks in, industrial goods, oil and gas, agriculture. So all in all, me buying the ETF just gives me access to, different stocks, and that way it, enables the investor to, get access to or reap from the diversification benefit, because I'm not just, skilled, or I'm not just restricted to just one stock.
Now, I want to put up a chart here. There it is, your VG30. So it's done, and it's what to the, it's a dark red line to the left. So it's done pretty well. But it's like I can see it moving almost in tandem with the NGX30. So my question will be, well, why should I get a VG30? I can just, model my picks to the NGX30, and I would perform the same way.
It gives you easy access to the market. So me buying a VG30 ETF, I'm buying just one fund, and it's giving me access to, the market. And in that way, transaction charges, if you're having to, buy 30 different stocks
and paying fees.
Transaction charges for each. But with an ETF, you already have access to the market by just buying a single securities that, gives me diversification. So basically gives you easy access to the markets. Number 2, diversification, transparency. You know what you're buying, everything, the fees, everything is basically stated. And I think it's really a good one. And in Nigeria, for instance, I know we have about 12 registered exchange-traded funds. And in Vetiva, we have about 4 exchange-traded funds. Like I said, one tracking the NGX 30. If you are interested in an exchange-traded fund that tracks the sectoral, tracks the sectors, we have that one available as well, fixed income. So basically something for everyone and for every investor.
Less than a minute to go. Thanks for the explanation. How do you see the NGX, the outlook for the stock market performing for the second half of this year? For the second half of this year, I will expect to see a mixed sentiment for the market. So we'll definitely see investors release their results, and strong performers would definitely attract buying interest. While for companies that might not perform so well, we see selling pressures on that end. However, so for the ones that definitely will perform well, we'll see that trickle down into the performance of the NGX. However, we must not forget that currently, I know the NGX, the all-share index is sort of like, bearish due to the attractiveness of the fixed income rates environment. But, regardless, we just see, a mixed sentiment come to play in the market. So all you need to look at, okay, what's my objective for actually getting in? Because now is actually a very good time. People always say you buy when the market is actually low. So yes. Hey, look, very informative discussion. Thank you so much for joining us. Really appreciate your time. Jesusetuntun Ajagun, who of course portfolio manager at Vetiva Capital Management Limited. Thank you so much for talking to us.
Thank you very much.